Pranjul Bhandari, Chief India and Indonesia Economist at HSBC, is joining us to talk about a very interesting report that HSBC has put out. Pranjul is authored, where you're looking at 100 different parameters to come to a conclusion. And of course, we'll go through it sector by sector, especially what we're seeing on banking and finance that I found very interesting. But let's start with an overview, Pranjul. If I had to break this down to a very simple question, is the Indian economy looking at a slowdown?
Yeah, great. Thanks for having me. So look, that's the big question. And we get a lot of data in India, and every data tells a different story. So we never really have a very strong verdict on what's really going on. So keeping that in mind, I took together all the different data points we get. There are about hundreds of them in monthly indicators, and I put them together, put them across different sectors. And what we really find is that a majority of the economy continues to grow at a positive clip. 55% of our indicators across the different sectors still continue to grow at a positive clip today. Now, a quarter ago, about 65% of these indicators were growing at a positive clip. So in a way, there has been a fall from 65 to 55 over the last quarter. And I think in a way, that is what is really impacting sentiments of growth, when we really think about it. There has been lesser proportion of the economy which is growing positively, although it's still a majority that is growing positively.
Okay, fair enough, Pranjul. But then let me come to the biggest issue that seems to be there, which is consumption. Are Indians consuming less? And what are you seeing in terms of consumption-facing indicators?
So there are sectors both which are doing better now compared to a quarter ago and worse now compared to a quarter ago. And I hope we can cover both. But in terms of the ones which are doing worse now compared to a quarter ago, consumption does stand out. And we actually broke it down across rural and urban, and both are seeing a slowdown. The slowdown is a little bit sharper in urban at this point of time, but it's there in rural a little bit as well. And this also sort of matches with other data that we have. So, for example, when we look at manufacturing, we see that consumer goods manufacturing is very weak, while industrial goods manufacturing is very strong. When we look at credit, we find that consumer credit is weak, but industrial credit is strong. So the consumer part is, suffering a little bit right now. My sense is, I think what's typical to urban is three things were working out for urban consumption until a few months ago. One was wages and salaries in high-end sectors like the GCCs, electronic manufacturing. There were a lot of high-tech sectors that were doing very well. That was good. Banks were giving out a lot of personal loans. That was helping. And stock markets were doing very well. And there was a good wealth effect coming out of that. And that trifecta was keeping urban consumption very strong. And that trifecta has softened a little bit right now. I don't think it's slowing in a meaningful way. I think it's just normalizing to more sustainable levels. But yes, it is looking like some sort of a slowdown when you look at it from afar.
Pranjul, morning, Neeraj here. You want to cover the other part as well, which is things which are withstanding better?
Yeah, sure. So some parts are doing better, and I would think the one that stands out is agriculture. So a quarter ago, we were still grappling with uneven rains. We had just come out from a heat wave. All of that is behind us. Things in agriculture look better right now. And if they continue, hopefully rural consumption will also rise in the next couple of months, but I'm not really seeing it yet. I think it's still early days. But agriculture is a sector that's doing, better than before. The other sector that's doing better is government spending. Both central government and state government had paused on spending during the election period, but I think they both are spending a lot now, both on current expenditure like subsidies and also capex. And my sense is that state expenditure is going to only rise in the next couple of months. So I think that part actually, still looks good to me. And when I look at investment, I see exactly this. I see that a large part of investment is doing well even now. And I suspect it has a lot to do with the government capex that we have seen, in the system right now. I'm not certain a private capex cycle has really picked up in a meaningful way. Real estate is doing well, but my sense is machinery and equipment factories are not doing that well. But the real estate and construction part is doing well, and I think that's also keeping investment high. And finally, the part I like a lot, my favorite, is exports. It's a clear sign of how India has diversified its export basket. The fact that we are now selling so many more professional services, that has kept our exports very strong. And every time we think it's slowing or it has peaked, it surprises us with a big number. Just on Friday, we got the October services exports number, and it was a record high. So these are parts of the economy that are still ticking higher. And as I said, a majority is still doing better now than it was a quarter ago.
Pranjul, is that the highlight really, the export growth, and is that a sustainable part of the ecosystem, considering that the China plus one theory is firmly at play, as a lot of corporates still tell us?
Yeah, I think exports, especially services exports, is a long-term story. We've been writing about it for a long time. It's not just professional exports rising because it was COVID. And COVID was a shot in the arm for this sector. But I think since then, a lot of the work we've done from the past shows that India is at this inflection point. Once services exports rise to a particular level, from then the growth actually becomes even faster than before. And India is in that level right now. This is a study we did when we saw India vis-a-vis other, countries which are leaders in services exports, mostly advanced economies like Singapore, UK, US, a lot of the Eurozone. But India is at that inflection point from where growth becomes high. And India has the capability, the scope. We have so many engineers, doctors, lawyers, HR consultants. All of them are being able to export their services at this point of time, something that we were not even thinking was imaginable 5 years ago. So I think this is a growth sector. When it comes to the China plus one story, I think that's more a goods export sector. And I don't think that's doing as well as the services export sector. In goods exports, some parts are rising, particularly high-tech exports, like, for example, mobile phones. But some of the mid-tech, low-tech, we're not doing that well, right? Like textiles, food, toys, leather goods, small electrical equipments. India hasn't really been able to do that well there. So overall, though, I feel quite satisfied because we have diversified and we're not just doing goods, but a lot more services.
Just quickly, Pranjul, I thought what you wrote about banking was fascinating because you're saying one part of it is doing well and the other is not. So there's a dichotomy there. Consumer credit not as well as compared to the rest of the banking sector. Can we quickly just throw some light on that?
Yeah, right. So, we know that, over the last couple of years, one group of credit growth, personal credit had been growing very rapidly, especially unsecured lending had been very rapid. RBI got a bit nervous. It put risk weights in end 2023. And since then, this category of credit growth has slowed. So the consumer facing category of credit growth has softened over the last 6 odd months. But around the same time, I find that industrial credit is actually rising quite rapidly and has in fact picked up pace in a meaningful way. And when I break down industrial credit, what I find is a lot of it is going to small and medium-sized firms, which is actually good news for me because I find that many of these firms, which earlier didn't have access to formal credit, are now getting access to credit, and credit growth for them is actually growing very rapidly. A lot of it has to do with our digital public infrastructure, the fact that small firms now have a digital footprint and they use that to show to banks their credit worthiness. And on the back of that, they get access to loans. So that I think is still a very strong story. But one slightly, not that exciting story is the fact that when I break down industrial credit further, I find that a lot of it is working capital loans and not term loans, which sort of makes me believe that a lot of it is not going for investment. Term loans generally go for investment. They're long duration loans. So I'm not seeing this private investment cycle coming out of the industrial credit. But yes, I'm seeing a lot of unbanked sectors finally getting access to credit.
Quick 30 seconds if we can at the end of the show completely, but your report states more sustainable 6.5 versus a heady 7. Is that 6.5 enough for a quantum of people coming into the job force?
Look, that's always a tricky question. India has to create many more jobs of good quality. And I think to do a marvelous job, it needs growth rates of about 7.5% or more. So from that perspective, no, 6.5 is not enough from like a 1 decade perspective. But at the end of the day, you have to be realistic. You have to see the global backdrop around you. And within that global backdrop, having a 6.5% growth, one of the highest for such a large economy, which has been sustained for a few years and is likely to be sustained at the 6.5 6.5%, I think is good. Also, 6.5 with agriculture, rural India also contributing and being more broad-based growth is better than having much higher numbers which are not broad-based and which just belong to one or two top-end sectors. Because if it's broad-based, then it can last for longer. So I'm not disappointed with 6.5% growth number now. I'm quite excited.
Okay. Pranjul, we'll leave it at that. That's two good news. 6.5% excites Pranjul Bhandari as well, and exports looking strong. So thank you so much for joining us and talking to us.